Hello everyone, my name is Ben Decker, and in this video I'm going to go over the Superbull trade. So quick disclaimer before I get started that this is not options advice, and you and only you are responsible for all the trades you put on. Make sure you understand options before you dive right in. So with that out of the way, let's get started. So I'm using the tastytrade platform. I'm up in the left hand box here. I'm going to type in TLRY, Tilray. That's what I'm going to use the example on today. So I'm going to go into the trade page in the table mode. Here's the options chain. You can see the days to expiration here in the middle. For this trade, I want to go between 60 and 90 days to expiration. So in this case, I'm going to use the June 18th monthly, which is 68 days to expiration. So open up that options chain. Up at the top, I have volume, delta, the bid, and the ask on both the call and the put side. So for this trade, I'm going to start out with a at the money call. So Tilray's trading at 1976. So I'm going to go about $20 here. I'm going to hit the ask. So that's buying the $20 strike price. And I'm going to sell the strike price that is about half the price of the $20 call. So in this case, our bid ask is about $350. So I want to go about $175. So if I go down here a little bit further, I'll hit the 28. You can do the 28 or the 29. This is about 180. So here we have a 163 debit. If we look at the curve analysis, so I'm going to do the drop down, go to curve, and this is what it defaults to, but if you hit the analysis button here, then you can actually see what the trade looks like. So here's what it looks like, your typical debit call spread. So you can see with the stock trading at 1976, our break even is 21 something, 21.63, whatever our debit here is. So $20 plus 163, that'd be 21.63. That's our break even at expiration. And then our max profit up here is $637 if it's above 28. So this is our typical call spread. You can see down here that the probability of profit is 34% at expiration. That's not very good. I like to keep it at least 50%. So how can we do something to make this pop higher? Well, if we go back to the table mode here, pop this back up. So we're paying a 163 debit here, and I want to try to make this into a credit to make it a higher probability of profit trade. So I'm going to sell a put to cover this 163. So if I go up on the option chain, down in price, for 163, I'm going to have to sell the 17 put. So if I sell the 17 put, we're now at 42-cent credit. Our pop is now 54%, which is higher than 50%, which is what I like. Here you can see that the delta here is about 50. So this is equivalent to about 50 shares of TLRY. And I have a margin account, so the buying power is just under $900. So if we go back into the curve mode, still have the analysis here checked. Here you can see it looks a little bit different. So here's our stock price. Let me drop that down. Stock price is at 1976. Our break even is way down at 1660. And now above 28, our max profit is 842. So this gives us a little room to the downside to not lose, and gives us 50 delta. So if we go back into the table page here, if I take off this put, you can see our delta is only 24. So by adding the 17 put, the short 17 put, that increases our delta, makes this more of a bullish trade, hence the name of the Superbull. For management, your risk here is getting assigned on the 17 put. So if we go back to the curve mode here, you can see below 17 your risk is being long 100 shares. So that's how this trade loses. That's what you're risking. So you shouldn't put this trade on if you don't want to get assigned 100 shares of Tilray at $17. If you're okay with that, then this trade is great. So that's the worst case scenario. Best case scenario is the stock goes up, you make money. For management, you can either take it off quickly, say 10 to 20% profit. That'd be more of a scalp trade. Or usually what I do is I hold on to the trade longer, try to get 50 to 75% profit. This is a directional trade, so you need the stock to go up in order to make money. And for management, I don't have anything that's set in stone. It's kind of how you feel the stock is going to move and when to take it off. But like I said, the risk is getting long 100 shares at $17 on this particular trade. So that's the Superbull. If you guys have any questions, leave them in the comments and I can be sure to answer them. Otherwise, feel free to hit the like button, hit the subscribe button if you want to see more trading content, and I'll see you in the next video.